Thanks very much, Matthew. I've been trying to think of something optimistic to say to cheer us all up, but I'm afraid I can't. So what I'm going to do is I'm going to look at some of the fiscal figures, and in particular focus in on expenditure and what's going on there. Can we have the next slide? Those of you who came to the briefing in March after the budget will have seen this slide before, but it's quite an interesting one. What it does is it summarises the slippage we already saw in the forecast over the next 5 years, comparing the Chancellor's original stat at this back in 2010 with where we got to in March this year. And as you can see, overall there was a borrowing increase over the whole period of 46 billion compared to where we started from. The whole of the slippage came through on the spending side. In fact, the increase in spending accounted for more than the entire slippage in the borrowing projection, which is quite worrying at this stage, given the emphasis we've got on trying to control this through capping spending. And just looking at a couple of the things there, social security and tax credits obviously went up quite a long way. The economy was a little bit weaker, but the key point was actually that inflation was higher than was originally allowed for, and it drove up spending on social security because of the re-rating, and that wasn't reflected on the other side with an increase in tax revenues. And on the right-hand side there, debt interest, a big worry, and that was already overshooting, really within less than a year of the original forecast. Can we have the next slide now? This updates us as to where we are so far this year. And as we can see, although this has been widely characterised as saying that we're roughly on track in terms of borrowing, we are roughly on track. But if you look at the left-hand bar, you can see that on balance, the outturns we've had so far this year are running a little bit ahead in terms of borrowing compared to where they should be. So we're on the wrong side. You don't want to make too much out of a 1.5 billion overshoot compared to the sort of the budget projection, but it is on the wrong side. And looking through on that, we can see that the big problem now, this year, is a collapse in tax receipts. In particular, corporation tax has been coming in a lot weaker than expected. But again, further along you can see debt interest looks like it's still running ahead of the forecast. Can we have the next slide? Right. Despite all of that, well, perhaps I'll just say a quick word. The forecasts that have been recently published by the Treasury, which is like their regular summary of independent forecasts, suggests that over the course of the next 4 years there's going to be an overrun in terms of borrowing compared to what the Chancellor was forecasting this March. So that's on top of the overrun of 46 billion that we already talked about, of something like 60 billion in total. So we're, according to independent forecasts, about 100 billion or so ahead in terms of borrowing compared to where the Chancellor hoped we would be when he set out his first forecast back in 2010. But despite all of that, of course, we've seen this sensational confidence of the gilt market, the international bond markets, in the credibility, the fiscal credibility of HMG. And it is very impressive. I mean, that chart is again one we've used in these briefings before. It simply compares the 10-year gilt yield against the rolling 12-month CPI inflation rate. And as we can see, while inflation has shot up, gilt yields have come down. So gilt yields now are less than half the current inflation rate. That's quite an unusual situation, and it is a testament to the credibility that the government has earned. And towards the tail end of last week, for the first time really in my working lifetime, we saw the government in this country able to borrow at lower rates than the German government. Gilts, in terms of yield, were trading below bunds, which is absolutely, well, it's unprecedented in my working lifetime. So, this is a strong testimony to fiscal credibility and what has been earned by this government by taking some fairly unpopular decisions. However, we all know that this is really this is a situation of thin ice. Every time we've seen this in the past, and those of us old enough recall the 70s, when you get inflation moving above gilt yields for any sustained period of time, sooner or later there is a serious problem. And so, you know, we are really dicing with problems here. We can pat ourselves on the back to some extent in retaining market confidence, but we have to be a little bit worried about this. Now, of course, Gilt, the servicing of the explicit, normal, declared, official national debt is only one part of our debt servicing. If we move on to the next slide, if we add in some of the servicing costs of what could be called the hidden national debt, that is our unfunded pensions, public sector pensions, the ones that the strike is about later this week, plus our unfunded state pensions, plus PFI, and just look at that total servicing burden, we can see that that is roughly 3 times, and it goes up quite sharply, 3 times the servicing burden if you just look at explicit debt interest. The debt interest path is worrying enough, but the true servicing burden is even more worrying. And by the end of this forecast period, 15-16, we're up to 200 billion a year on what might be called the servicing burden of our real national debt. Now, it's not just the question of what is happening over the next 5 years. We obviously think the Chancellor should stick to his guns in terms of spending tomorrow, and I'm sure in broad terms he's going to. There seems to be a bit of deck chair rearrangement going on that Mark referred to earlier on, but it doesn't seem like there's going to be any big slippage on the spending side. And that's not only to keep market confidence, it's also to bear in mind that the world doesn't end in 2015-16. You know, we've got a problem that goes on beyond then. We have been spending more than we can sensibly afford, and there are commitments to spend even more in the long term, in particular connected with our ageing population. And I thought it would just be useful to end with this slide, if we move on again. In the summer, the Office for Budget Responsibility published what's called the Long-Term Fiscal Sustainability Report, and that's where these figures come from. And as you can see, they're forecasts out for half a century. Now I know it's difficult to forecast 50 hours ahead, let alone 50 years ahead, so you have to take it with a pinch of salt. But basically what they've done is they've looked at the forecast of the economy, and they've looked at the forecast of public spending on the basis of more or less unchanged policies. And there are details you could argue with, but basically this is unchanged policies, forecast of the economy. They are assuming, and this picks up a point that Ruth made, that the long-term growth in productivity in the economy is 2% per annum. As Ruth has already said, there are some reasons for thinking that may be actually a little bit optimistic, but that's what's built into this. Now the bottom line, the blue line, basically assumes that the NHS, because the NHS is a very key component of this grim long-term fiscal outlook, because the healthcare costs of old people in particular are very high. I know we're all getting older and it's great news and so on, but you know, we're very expensive as we get older in terms of healthcare costs, and that drives up NHS spending. Now, so the bottom line assumes that the NHS is capable of delivering the same growth in productivity as the rest of the economy. But in the real world, of course, the NHS does not deliver the same growth in productivity as the rest of the economy. And what the green line is an alternative scenario in which they assume that NHS productivity grows by 1% per annum less than the growth of productivity in the economy as a whole. Actually, the evidence we have suggests that NHS productivity, the gap is even bigger than that. But that green line assumes that, and as you can see, it's a very grim picture. You know, the long-term spending outlook in this country, we're not the only country to have this problem, but the long-term spending outlook is pretty grim. So we can't afford to ease up on this public spending restraint now. As soon as you get to the end of the period, spending starts bouncing up again. Now I'll just finish by quickly reiterating something we've said before. We think that the fiscal rules that the Chancellor has, that structural deficit rule and that debt rule, would be greatly enhanced if he would also commit himself to a medium-term spending rule to reassure us all, not just the markets, but also us British taxpayers, that he was aware of the fact that you've got to do something about limiting your spending to a sustainable budget in the longer term. And those figures suggest that we're a long way from that at the moment.